Thank you very much. Good afternoon, everybody. So what I'm going to do is I'm going to start off by running through a quick presentation, and then I'm going to ask my distinguished panelists to come up and join me up here. So, my name is Ben Woodhams, as you've just been told. I'm the Managing Director of Knight Frank Kenya. I've been working for Knight Frank in East Africa for the last 18 years. And we have a large operation, as Peter Wellborn said this morning, of over 700 staff outside of South Africa, scattered across the continent. So what the question we are posing today is, has the shift of focus moved from West Africa to East Africa? That is to say, the growth. So what I'm going to do is I'm going to go through a few slides very quickly to try and set that scene. And then, as I say, we'll try and explore that issue a little bit further with the various panelists. So this slide simply tells us the GDP rates over time, each country in a separate color. I think it really tells you that the East African countries that you can see on there, I hope you can see them. The idea is to make these slides too small so that you can't actually pick us up on any of the numerical inaccuracies in them, but big enough for you to get the general gist. So what we're seeing is the East African countries are relatively stable in terms of GDP, whereas the West African ones are slightly more volatile. So in other words, your risk is slightly less in East Africa, given that you have a better idea as to what's going on and what you can forecast. Now, if you thought the last slide was bad, this one is absolutely horrific, but each one of these slides says pretty much exactly the same thing. If you look at slide number A, you will see the top right-hand corner, you've got two flatlining, which is a good thing in this case, because that is the relationship of the Kenya shilling to the US dollar. But as we heard this morning, the line below it is the Nigerian naira, which is artificially pegged to the US dollar. You could say that the same thing is also true of the Kenya shilling, but for the time being anyway, we are experiencing relative stability with the Kenya shilling, and I think really by and large, even over the last decade or so, the Kenya shilling has proved to be, certainly in African terms, virtually a hard currency really. Slide number B more or less says the same thing again, really showing the relative stability of those countries. If you look at the slide very closely, you'll see those ones that are spiraling out of control in terms of inflation: Zambia and Angola. The Eastern African countries more or less relatively stable. Again, slide C, inflation. You've got your targeted inflation versus your actual inflation, so you're looking at the discrepancy between the two. And again, the Eastern African countries appear to have inflation more or less under control and where they expect it to be. Same with the policy interest rates, relatively stable, very little borrowing. In Kenya, there's actually, as has been said already, less than 20,000 mortgages in the entire market. So it's a very equity-funded property market. And I think, as was said by a real economist this morning, as opposed to an estate agent masquerading as an economist, it's all about oil. Certainly, a lot of it is about oil anyway. East Africa wasn't actually producing oil at the time the price crashed from $80 a barrel down to $30 a barrel. And the thing we need to bear in mind is that East African oil is expensive to extract because it is in a remote location. It's also very waxy, therefore it needs to... I don't want to get into too much detail because, again, I'm an estate agent. I'm not a chemist, but it needs to be mixed with kerosene or passed through heated pipes. Very expensive to get out, and it's not really economically viable until it's above about, back to $70, $80 a barrel. So East Africa has been a net beneficiary of a reduction in oil prices. It means that the cost of everything else that's basically affected by transportation is reduced, and therefore, obviously, fuel at the pumps, price of vegetables, everything is lower than it would be if oil was at that higher level. And the cynics amongst us could argue that oil never really does African countries any good in the long term anyway. So at the moment anyway, certainly that stability is benefiting East Africa in particular. Now, if I have a quick look at, I'm going to go through a few slides. Haven't got very long, so I'm going to rush through this, but this is the retail outlook in Nairobi. And what you can see here, those in red are under development, with the exception of the hub, which opened a couple of months ago. A lot of retail going into Nairobi. People are asking if it's in oversupply. Personally, I don't think it is. It's another story that perhaps we can touch on a little bit later. But it's certainly true to say that a lot has happened in Nairobi, as Peter said this morning, in a relatively short time. Dar es Salaam, on the other hand, I think is probably the converse. We have the Milimani Centre, which has been around since early 2000s. But the others, so we've got Milimani Mall, Mbezi Mall, Peninsula, Dar City. Those are all fairly big projects, in particular Dar City, which haven't taken off. We would have expected them all to be well under construction by now. That hasn't happened yet, so plenty to talk about there. The Kampala retail outlet, on the face of it, it looks like there's more retail in Kampala than there is in Nairobi, but quite a few of these are standalone stores, ShopRites and so on and so forth, so there isn't as much there as it looks, and I think we're possibly slightly in oversupply in retail in Kampala. Kigali retail outlet, well, Knight Frank have recently opened an office in Kigali. It's very busy. The population of Kigali is only 1 million people. The entire country is only 11 million. So you could say it's a fairly shallow market, but it doesn't have a lot in it at the moment. So with a captive population of 1 million people, I think there's room for a couple of nice shopping centres in Kigali. Okay, the industrial. Now this is interesting because this slide shows you really what's happened in Nairobi in particular. Those are the existing spokes of the bicycle wheel, if you like, the major trunk routes in and out of Nairobi. These are the new bypasses that have recently been built around Nairobi, and as a result, they've really changed the way the city works. These are, the green ones are due, they are our future. But what they've done is they've really influenced where the new logistics centres are going in Nairobi. It's having a huge effect on Nairobi's land values and how the city works, and also its ability to absorb space, and it's having a huge effect on logistics. These are some of the early adopters who are, we're going to be talking about logistics tomorrow in a separate session if you'd like to attend that, but these are some of the people who are moving into these new centres such as Tilisi, Tatu City, Northlands and so on and so forth. That's a very interesting trend that we're seeing in Nairobi. This is a very quick slide which shows us a diversion between demand and supply and the commercial office market in Nairobi. It's not quite as tragic as it looks actually, because we are still seeing quite a lot of take-up in 2017. It's just a little bit difficult to forecast, so don't panic, but there is certainly an oversupply issue there. Dar es Salaam, you can see that the relationship between demand and supply is much closer. In Tanzania, a lot of parastatal investment in the office buildings, not so big a private sector, but a fairly well-balanced relationship between demand and supply. Commercial office market in Uganda, well, again, it looks like there's a good relationship between demand and supply there, but I know from my colleagues in Uganda that it is getting harder and harder to let the new space as it comes onto the market. So that's just a really brief snapshot of what's going on in the region, and perhaps giving us some clues as to why the shift may be happening between from west to east. What I'd like to do now is to welcome my panel to the stage. I was hoping that next slide might have all their mugshots on, but it doesn't. But never mind. If you would like to come up, please, I'd be very grateful. So I have David Kanyua, who's a director of Esham Park, Kenya, who are a financial advisory firm. Nicholas Corbishley, who many of you may know, head of African investments of Old Mutual. Amin Musa, who is a partner at Anjawala and Kanya, who are Kenya's leading corporate law firm. And Dr. Dan Tebwezi from TWED, who are a property development group based in Uganda. So if you'd like to give them all a round of applause, please, to welcome them to the stage. Thank you, that's the perfect slide. Thanks very much. Right, so the question that we're hoping to answer is, has the centre of gravity for growth shifted from west to east? And I think I'll start with Nicholas Corbishy from Old Mutual, who've recently, we've seen a merger with UAP in Kenya, and also the recent acquisition of 50% of Two Rivers, which is Centum's 62,000 square metre retail development in the northern side of Nairobi. I think, Nick, the question for you really is, you know, cheating a bit. Do you think the growth has shifted from west to east? I mean, you're investing heavily in East Africa. Are you doing the same thing in West Africa? What's your feeling as to that trend?
Right, I mean, we are long-term investors. We're taking a 10 to 20-year view in terms of our investment horizon. And we've chosen two key countries where we're looking to put a major portion of our investment, and that's Kenya in the east and Nigeria in the west. Some of you will be aware that, in fact, we just announced last week the formation of a new property fund in Nigeria. We've gone into partnership with the Nigerian Sovereign Wealth Fund there. So for us, we are still looking at both sides of the continent. I think it's more of a timing issue. At this point in time, the Kenyan economy is growing well. In fact, the whole East African node is growing well. So we're more likely to deploy assets there in the immediate future. But you can't ignore West Africa. It's got a big population, it's rapidly urbanizing, and at the moment, the difference between the two is oil. East Africa is not dependent upon oil, West Africa is, and it's got to adjust. And it's going to go through a painful process. It's going through it at the moment, and there's another 12 to 18 months of that to take place. But there is a short-term shift, but long-term, I don't think you can discount the West.
Okay, thank you. So I guess in summary, we're looking at East Africa at the moment because we're seeing that relatively short-term stability. When everything sorts itself out oil-wise, we might find East Africa lagging behind as it takes a while to start extracting its oil. One of the questions that I've been given here is, how important is Nairobi as a regional hub, and how do you compare it to Addis Ababa, for example? Now, I think that's a very interesting question because you know, Nairobi is not without its problems. It certainly is the hub of East Africa at the moment. Nobody can deny that. A lot of people discount Ethiopia because it's a very inclusive government. It's very difficult for foreign investors to operate there, particularly if you're in the insurance or financial sectors. But if I'd like to pose a question to you, David. Isham Park in Kenya, your financial advisory firm has recently had projects in Ethiopia as well as Kenya and South Sudan. What is your take on the possibility of Addis Ababa with the new development that we're seeing there, the fantastic airliner that it has over the continent? Do you think it could threaten Nairobi's position as a regional hub?
Thank you. I think the way to answer this is probably to give the immediate perception that comes to people's minds when you talk about Ethiopia. We've been doing this for about 7 years now, and ironically, in fact, our first finance project was actually in Ethiopia. And hence, there's a misnomer about the pluses and minuses in Ethiopia. I think, let me just go to what appears, let's say, on the CIA website. I think currency controls is one item that jumps to mind. Secondly, there's also a lot of talk about the sectors that you can actually get into as a foreign investor or a foreign company. And then we have the pluses, and those have captured imagination or attention in the last 2, 3, 4 years, which is largely around infrastructure. Now, comparing the two, I think you have a case whereby in Kenya and a few other East African countries, you have infrastructure coming after what you would call economic development, if you could have a grammatical separation like that. But in Ethiopia, we have a situation where I think infrastructure has preceded economic development. Now, at the end of the day, any company that has to be successful in Ethiopia, a few things have to happen. Yes, I do agree that you do need then to have local partnerships. Number two, it is also not exactly correct that you can't then export capital back. I think the trick is, well, not the trick, but the idea is that you have to then get whatever projects you're doing to be prioritized under the central planning agenda of the Ethiopian government. And hence, of the 2-3 projects we've done, I think two and a half for the $100 they may have put in. At least they can evidence that they did expatriate back and at least then earn at least 85% of that. Now, but then what will ring true in Ethiopia and even the largest African region is that any product you put, in this case, let's talk about property, you have to be able then to price and sell or at least offer projects that are offered to the what you call the lower middle income category. The disparity of incomes is perhaps highest in Ethiopia in all East African countries. So I do think that at the end of the day, any good economist will say that the true economic success is a fruitful or the capacity of someone to buy what you're selling. And I do think in Ethiopia it will take some time. The population is big, and hence the true success factors will be you need to be able to price an item in an economic geography whereby the affordability is not as high as places like Nairobi or Uganda for that example. Yeah, thank you.
Okay, thank you very much. So currency controls are negative, but not insurmountable problem. The infrastructure is being planned. So rather than forcing through infrastructure in a development that's sprawled over time in a rather uncontrolled way, in Addis they're able to put that in ahead of the growth that's going into the city. So that's obviously going to make for a much more amenable design for investors and for developers. So that's fantastic news. I mean, personally, I do see that with the problems in particular that Kenya Airways is having with the wheels falling off that, hopefully not the wings, Ethiopian Airlines really could make a big challenge to Kenya Airways' dominance as the I guess the service provider of choice for air travel. So that's a very interesting one to watch, and we need to look at that more closely and perhaps establish businesses in Addis Ababa to be ahead of the curve. Right, I have another question here which I would like to ask, and it relates to going away from the private sector development such as malls and so on and so forth, and looking at PPPs, the public-private partnerships that we've seen within the East African property sector. The question is, can we expect further PPPs in the region, and how successful might they be? And that's to Amin Musa of Anjawala and Kana.
Thank you for that. So I think we are now starting to see PPPs starting to develop as a structure for infrastructure and now even for real estate. So we've got, from a Kenyan perspective, we have new laws in place that set out how PPPs generally are supposed to be structured. Secondly, there is now a provision where for certain PPP projects, the government of Kenya will provide appropriate political support or guarantees for PPP projects. And over the last 3 years, we've seen that primarily being used in the power sector, where we're doing a number of transactions under the PPP structure. What's, however, interesting over the last 12 months is we're now starting to see that model being used for real estate projects. So, for example, we're currently involved in a PPP project with the Nairobi County government for building of social housing, which I understand is now